Hello traders, Day Trader Matt here of businesswithtrading.com, doing a trading strategy recap for Monday the 29th of June, and today was a very interesting day. The market opened up with a gap down here and chopped sideways a little bit and then started to move lower, which it ended up moving a lot lower after lunchtime. Today we made two trades. Pulled 2.5 points out of the market, missed a couple entries, and that's how it goes. We can only trade what's in front of us. It would be nice to make 10 points every single day, but that's just not feasible. It's something that you kind of have to look at, what is your style, what's the easiest way of trading versus what do you actually want to do. For me, it doesn't make sense to sit in front of my computer from 9:30 to 4 o'clock. Just because, for one, as humans, we're not supposed to sit in a chair for that long. For two, our brains are not going to be able to intensely focus that long of a period of time unless you take a lot of breaks in between. And there's no reason to, set for an hour, take a 10-minute break, set for an hour, take a 10-minute break, set for an hour, take a 10-minute break. It just doesn't make sense. Or, for me personally, trading the morning and then taking a 2-hour lunch and then coming back and trading the afternoon, it just doesn't make that much sense for me. I don't really see the afternoons usually being that important. For some reason this month, a lot of the afternoons have been quite interesting. Today is one of those as well. This afternoon was very interesting. And before we talk about the trades, let's talk about what we did, what we talked about this afternoon. At 12, when we were actually shutting down the room, I told everybody, I was like, all right, if it breaks this level here, it's going to go much lower. And that's exactly what happened. It went a lot lower. And it closed very close to the lows of the day. That's a trade that would have worked out great. And it literally had very, very little risk. Because look at this. Took it out, came back up, did not even get back above it by 2 points, and then it rolled over. Very interesting. Obviously that's not a trade that we count in our stats because that happened outside the room. But whenever we close the room, if something interesting is happening and it looks like there's a very good chance of it happening, or even if there's not a very good chance, it's just possibility, we talk about it. Now I'm going to tell people, if this happens, then I'm looking for this. And I was pretty 100% on the call today when I talked about it. I was like, if this happens, let's look for this. If it holds over it, we'll look for it to go higher. It broke it, it went lower. That's what happened. And that's usually what we do. Sometimes there's zero clarification. We don't really know what's happening. We don't make a call. But that's something that I do for the members because some people do like to stay around and trade. If there's nothing going on, there's nothing going on. But, if you want to stay around, if there is something of high probability, it makes sense. Because today, I said, if it breaks 64, it's going to go lower. It did break 64. It came back up to 65.75, just shy of 2 points over it, and then it just took off to the downside. So let's say if you shorted, and let's say you caught 64, and then you sold right before the close at 51, we'll just call it 51. That's a nice trade. 13-point trade. That's not anything to scoff at. And that's a good afternoon. The majority of afternoons are not like that. But this month, we've had a lot of good afternoons. So I feel like that should be talked about, because some people ask me, why do you only trade in the mornings? And the big reason is because if we focus on one market, we're better attuned to that market. Our minds are attuned, and it's just easier because we just watch one market, we make some trades. Some days are going to be better than other days. But statistically, we make about 50 to 100 points a month. It is what it is. Could I trade 5 markets? Yeah, I could, but I don't want to, and there's no reason to. And a lot of times, people join because they're newer traders, and there is absolutely no reason why you should be focusing on multiple markets if you're day trading and you're new. There's no reason to. And if somebody tells you you should run from them, because they're really teaching you wrong. Because the mind can only focus for a set period of time on a finite amount of objects. So if you're trading 8 things or 6 things and you're watching, 5 different things on your chart, that's way too many things. And the mind's going to get overwhelmed. So that's one of the reasons I focus. Because the mind can only focus for a set period of time, there's really no reason to day trade all day long. It really doesn't make sense unless you can just break up your day, and that's just not really conducive. I can make what I need in the morning. We do really well. So anyway, that's a little bit of a rant. So let's get into what we actually did today. Okay, today we made 2 trades. We pulled 2.5 points out of the market. Not a great day, but it wasn't a loss either. We did miss a couple entries. First trade right here, we did get long OHAF. We got long. Actually, it's up here at 2060 half, if I could read correctly. And then we got out right up here at 2061 half. This is actually 80. Well, I'm really butchering this video. Alright, at 2080 half is where we got long, and 2081 half is where we got out. We stayed in it, we moved our stop up, price was moving up, and then price moved down, took us out. That's exactly what happened. And then price chopped around, chop, 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 chop. And then it came down, and we ended up shorting right here. And price came down. We ended up getting out right here. Very, very small trade. Came back up, and then it rolled over from there. We were watching it, didn't really see a whole lot. Thought about getting long over here, didn't do it. It is what it is. It did come up, and then it started to sell off again. I was looking to short up here, actually. And that's one trade we missed. We tried to short up here. Actually, we tried to short right here. Yeah, we tried to short 78 even and could not get that. It is what it is. And we thought about taking this, and we really wanted to get an entry here, but it just didn't look good, so we decided not to do anything there. And it is what it is. So that's basically the day. Okay, so trading's all about picking your spots and taking them. Our philosophy here is that limit orders are the only way to trade. When you're trading stocks, you have a little bit more leeway because stocks move a little bit slower, and they're able to, they're not as precise. The ES is a precise instrument. There's a ton of liquidity, so you can trade hundreds of lots. You're no problem doing that. Lots, contracts, it doesn't matter what you call it. It is the same thing. So you can trade hundreds of contracts, no problem. but it is a precise instrument, and that's why I always use limit orders. Because look at this in here. We got in at 0.5, we got out at 1/2. Went a little bit higher. It went as high as 3/4, which means we would have been able to get out at 3s. But calling the top, nobody does that. Professionals. They just get in, they get out. Get out at a decent spot. Because you don't want to, if there's a high probability chance that the price is going to move higher, which there was here, but it hits the minimum move that it needs to do, then you want to protect yourself. Because if it hits the minimum that it has to go in your trade, in your setup, you want to protect yourself. It can go a little bit higher, but in that same instance, price has come up. It's gone the minimum that it needed to do to finish the trade, and then it comes back down and it stops you out. Let's say hypothetically. Well, that was a bad trade. It wasn't bad because it was unsuccessful. It was bad because price hit your setup, you took the trade, it made the minimum move that it had to do in order to finalize that pattern, and then it came back down. Should have protected yourself. That's what stops are all about, and that's why I talk about risk all the time. I have articles about it. I talk about it. I have it in the courses and stuff like that because it's important. And it's something that I look at. If I had to put a percentage on the most important part of trading, it would be psychology and your risk management, and that would be like 110% of it. The other 1% would be strategy. And I know that's over 100%. It's a little bit of a joke, but also a little bit of truth as well. So hopefully you guys understand what that means there. I'm not just bad at math. I was actually pretty good at math. I was the kid who, in like a advanced math class in high school, I was the kid who had the group of guys in the back of the class who were making games on our calculators so we could play the games while the teacher talks, and she thought we were paying attention. We were actually playing games. Everybody won. So anyway, that's that. But anyway, hopefully what I talked about made some sense to you. Feel free to comment if something stuck out. If you're like, oh well, that was pretty good, maybe you want to add on to that, or just talk about it. Feel free in the comment section below. As always, if you have any questions, ask. I was once a new trader, and I'm pretty sure I knew less than anybody watching this video right now. So no such thing as a dumb question. If you have anything, ask. That's what this whole platform is built around, is helping out other traders and getting you over that hump. Taking a little bit of success and turning it into a little bit more success, or taking no success and turning it into success. Because we all start in different areas. Our paths all start in different places. Because we're all different. That's what makes the world great. That's what also makes trading great. So with that, I'm going to leave you for today. Have a great rest of your day. Thanks for watching, and I'll see you back here in the markets. Thank you.